Let's
Yes.
kick off this morning's Daily Energy Markets Forum, Tuesday, May 11th, the day before Eid, or close to the Muslim holiday at the end of Ramadan. And best wishes to everybody that's celebrating those holidays, and much of the Middle East already closed for that holiday. Let's kick off to Sydney with Peter McGuire, CEO of XM Australia. Peter, the outlook from China, despite these disruptions in the US, remains quite robust. We saw data coming out overnight from what the sort of elevated prices, what they call the factory gate data, which shows prices rising quite heavily in export-oriented China. Things still racing along in China.
Absolutely, Sean. And, from a demand side, very, very strong numbers. We experienced that 225 a ton out of Singapore yesterday for iron ore. So all-time high. You've got copper very, very strongly bid up at 10,500 a metric ton. It's up the best part of 20% or 22% in the last month and a bit. So it's taken a lot of the other base metals up with it. So inflation's certainly a concern, and how that runs out maybe third or fourth quarter. But at the moment, that strong demand coming from China, the global appetite for raw commodities and infrastructure and rebuild is very much, I think, going to send us into a fairly strong move to the upside and continued strengthening across many of those base metals and other commodities.
Peter, the inevitable areas of concern that Vandana points out there while analyzing the overarching picture, the macro picture. But meanwhile, on the trading end, hedge funds are pouring back into oil. They've boosted their position for the fourth week in a row, buying up to 100 million barrels over the last 4 weeks. There's a lot of confidence in the momentum of the oil market on the long position. Absolutely,
Sean. And where we are from as the driving season starts to engage, possibly we see a Brent 72, 73. There was a fair bit of heat earlier in the last matter of days as far as the pipeline. But if you're looking at the big scheme of things, yes, US dollar continues to soften. Global demand is increasing, so all of that is, I think, a nice wind in the sails for producers. And you could see a WTI a 67, 68 sometime in June. So I think that momentum, more of the hedge funds will enter, and they'll start to stack even larger positions, I'd say, from a speculative side, Sean.
And we've got 80% of the positions, the open interest is on the long side. What does that tell you about the structure of the market going forward for that very unbalanced long position versus short?
Well, it tells you another side that you can also, if things go the other way, you can get short squeezes, and and all of a sudden it can ratchet down a matter of dollars very, very quickly. So that's the issue at hand. If you get a strong move to the upside as far as, and we don't know what happens in the future, but US dollar goes back to 93 or 94, or something else happens from a geopolitical concern and the unknown with the likes of Iran and Israel. So all of those parts need to be also considered on the geopolitical front, and more importantly, what that does to traders and their appetite to continue to be long.
Peter, looking into the outlook in China, we're seeing, as mentioned by Vandana, a lot of attention taken by the resurgent American economy, but China outlook will probably still be the engine for OPEC Plus as they make their decisions over the coming months.
No doubt, Sean, and the country is absolutely booming from a demand side for all base metals, as I mentioned earlier, and of course energy. So that will only grow as each month wears on. I've spoken, we've got some Chinese nationals that I buy the Financial Times from each Sunday, and they talk to their family members in Shanghai, and they tell me that things are very, very good over there and all across pretty much all of China. So there's no downturn or negativity. Their families are doing quite well commercially. the local economies over there, and the man on the street, the woman on the street are performing very, very well. So that tells me that there's a very strong confidence level across all of China, and hopefully we all get that very much washing across the rest of Asia and into India and the rest of the world.
But the Chinese won't be traveling too far outside of China, I would say. They became a major source of tourism for here in Dubai and many parts of Europe, but they will not be on the road this year, I would suspect.
I would think you're right, Sean.
Next month, June, getting 46% of this room, followed by sometime in Q3. But nothing happening in May, it would appear, Peter. Although we did get a forecast early in the week by Jorge Montague that it would be in the coming week. And then we got a forecast from our other commentator, Omar Najia, who said it would probably be in the third quarter. So I'll put you on the spot, Peter. What day next week will it happen? No.
Well, I'm with Omar, Sean, so I'm saying third quarter. But if it's going to happen next week, then it's going to be Thursday. There's no doubting that. Always on a Thursday, Sean.
Always on a Thursday.
Does it have
to? Is it ultimately at this point we have to see tangible demand increase, i.e., the driving season, or I mean, what's happened with the momentum play? Is it burnt out? We now need tangible demand.
Well, we had a good move to the upside with that. The shock as far as the pipeline. So you get 3 or 4 different things. First off, you had a very, very strong move to the downside US dollar over the last matter of days. You had poor or an underwhelming NFP number, but if you had a stronger non-farm payrolls number, then that may have supported the move to the upside a little bit more. Then you've got
supported equities, but not oil, obviously.
Well, exactly, and then we've had the Nasdaq get hit. I'm having a look at Taiwan and Tokyo today. They've been spanked down 3 and 3.5%, nearly 4% on some of those. So their equity markets are being hammered. So if you get the rising tide and you get first off, and you get throw a little bit in there as far as, some geopolitical tensions over a hot July or August in the Middle East, and that creates more deal tension there, then possibly you're going to hit that number, Sean. That's what I'm looking at, but you're not far away from it, and it can happen very, very quickly. We've all been on these markets long enough to realize that a week's a long time in the commodity markets.
I think it's also worth noting, and that's why I put it into the question today, that it didn't happen for a year before COVID. So the sort of 5-year average and all of those things, although we are in exceptional times, there's no doubt about it. Listen, we wrap it up there for the week. Eid Mubarak, as they say to everybody celebrating the holidays. We'll take the rest of the week off, back on Sunday. Vandana, thank you so much. Laurie, best regards. And Peter, thank you for your insights today, as always. Really appreciate it. We'll catch up with everybody from next Sunday. All the best. Have a great few days. Cheers.
Thank you.
Thank you.
Bye.